Hey everyone, thanks for joining in. Hope you're all well. Just a quick sound check before we go on. Okay, audio seems to be good on my side. Let me know if there's any issues. We can get started with a quick general advice and risk warning disclaimer. Note that any advice given is deemed to be of general nature, as the information or advice given does not take into account the particular objectives, financial situations, or needs. Therefore, at all times, you should consider the appropriateness of the advice before you act further. CFDs and Forex are leveraged products that carry a high level of risk and are not suitable for everyone. You can lose more than your initial deposit, so you should ensure CFD and Forex trading meets your investments objectives. Strategies and charts used in this presentation are for example only. You are reminded that past performance is not indicative of future performance. Okay. All right, so let's just jump straight in. I don't think we have a lot of fundamentals to go through this week. Comments from FOMCs. I think Bostic already spoke a little bit hawkish there, but Jay Powell last night pretty much shut it down. Looking at more of a disinflationary condition in the US, so that kind of sends a little bit of a dovish note. So let's take a look at this one here. The technical correction that we were kind of looking out for on the dollar index, that's pretty much I wouldn't consider it done, but at least it's enough in terms of correction. We have retraced to 104. That's pretty much about 61.8% in terms of Fibonacci retracement on the dollar index. So just waiting for the momentum to turn around, and we could potentially see more continuation to the downside for the dollar index, especially with comments coming up from Jay Powell like that. Right, so I think we can get rid of this note here, or I'll just leave it there for a little bit. It's still there. Okay, so we got 104 on the dollar index. So maybe you guys didn't take note on the dollar index, or maybe you guys didn't have access to the dollar index. So we are now taking a look at the dollar index. This is probably more on a reference point rather than anything else. So we got 104, pretty much capping it right now in terms of how far up it can go. Maybe it could reach towards 78.6% once it does go through the 104. But right now, today actually, we are looking at a little bit of a resistance coming in at the 104 level. The momentum still points to the upside though, so we need to be a little bit more cautious. A few things to note. For example, on the pound USD, there are several key levels to watch out for. The 1.2 level on the pound USD, that we saw the market came back down yesterday, pretty much towards the 78.6%. I got stopped out on position yesterday, but I still got a remaining position running on the pound USD. That's basically on the back that we're looking at a stronger support at 1.2. There are several similarities that we can draw across maybe the Aussie USD, the Euro USD, and the pound USD. So there are several key levels to watch out for. The pound USD would be 1.2. Now, daily traders or swing traders probably still looking for a little bit more of confirmation in terms of any change in momentum at this point in time, and we want to see price goes above the Ichimoku cloud. Ideally, if we are looking at that kind of scenario, we're really looking at a break above 1.2150. So how does that translate to what we can do today? So yeah, this was one trade that was on Monday. I got stopped out. I got another position running on this one here. My stop loss was at 1.1950. Some of you guys had that stop loss at 1.1950. That was at a really close call to that. But anyway, if you guys have a long position right now, your stop losses would be at 1.1950 at the very least. All right. We had a close call around 1.1950. I really wouldn't want to adjust the stop loss at this point in time. So yeah. Anyway, you guys thinking of going long again on the pound USD? Then you can use that 1.1950 in terms of target level. Ideally, we are looking at around 61.8% as a little bit of a resistance there. That's pretty much in line with 1.2150, which is the resistance that we need to watch out for. That's capping the daily candles, right? So with this one, in terms of how far of a target you're going for, if you have been in this position since Monday, then yeah, I don't think it's quite time to adjust your stop losses to 1.2. I think we still need to give the market a little bit more room to go. So stop loss would still be at 1.1950 for pound USD. thinking of jumping in again on the sterling here, you could do so as long as you're willing to have that stop loss at 1.1950. Can't really use 1.2030 as a stop loss at this point in time, unfortunately. In terms of target level, you have your 1.2150. You might want to scale out a little bit right now at 1.21 if you're a little bit worried. Otherwise, you can leave it there. In terms of target level, it'll be 1.2150, and then we've got 1.22, which is in line with the 78.6% on the hourly time frame. So that's pretty much it on the pound USD. I don't think that's really interesting. It's either you're in, or if you're thinking of jumping in right now, your stop losses and your risk reward ratio are going to be a little bit weird, right? If you jump in right now, your stop loss is at 1.1950. In terms of your target level, it'll be at 1.22. All right, you might extend it a little bit towards 1.23 if you're jumping in right now. That would still give you an okay risk reward ratio. Again, this is huge, right? We're looking at a minimum stop loss of 146. Sorry, this is on the 4-hourly time frame. Let me go through it on the hourly time frame. It would be about the same anyway with the hourly time frame. You could have a small stop loss, maybe around 1.2032, but I don't really think it's it's great for you guys to jump in right now. In terms of risk reward ratio, it just doesn't click. It just doesn't make sense. If you want to wait a little bit, if we look at the hourly time frame, you might see a little bit of pullback. 1.2050 might be a good level to jump in. That would still be a 100 pips stop loss for you guys. So it's still huge, right? We're not really looking at anything smaller than that. If someone asks, okay, how about we go on to the 50 minutes time frame? Can we look at the smaller entry on the 50 minutes time frame? You might be able to trade a little bit of a breakout, and that breakout would come in on the US session. You need to wait for about an hour, I guess, if you want to wait for the US session to break. But again, in terms of resistance, not really much there, and that's pretty much the range. Intraday wise, I don't think it's a great position on the pound USD to go short in any ways. You might want to be looking more of a long position. I really want to see this transition above the Ichimoku cloud, and I think we can see that transition above the Ichimoku cloud. It's either we break immediately or we see a little bit of a pullback, maybe 5-6 hours time. It will come back down to about 1.2050. I think that's a more ideal entry level for the pound USD. Again, minimum stop loss is going to be 100 pips. It's going to be 1 full cent. In terms of target, you could go for 200 pips, you can go for 250 pips. It's completely up to you on this one here. Yeah, Naman, I'll answer it for you, and we'll go through them one by one. I normally cover the major currency first. Okay, so all right, this is the pound USD. We are referencing 1.2 as a key support level. On the Euro USD, the key level to watch out for is actually 1.07. Now, this is actually turning a little bit better than the pound USD, right? We saw a little bit of a stronger pullback, nearly touched at 161.8% in terms of correction, right? So this is the daily. We just need this one to close a little higher. Ideally, if we can have a daily close above, closer to 1.08, then it'll actually form at least a morning star in that correction. So we might see a little bit of a turnaround happening. Other than that, we are pretty much waiting for more of a confirmed close above 23.6% before we can actually initiate any swing trade on the Euro USD. You guys decide to jump in on this one here, you might want to wait for the daily momentum to turn around as well. How does this translate into the hourly time frame? Well, let's take a look at the hourly time frame, and let me do some cleanups. All right, I'm keeping 1.07. I'm keeping 1.08. Yep. All right, so this one here is within the Ichimoku cloud. I think what we're looking at, we might actually see this one pull back down a little bit. Hopefully not towards 1.07. Ideally, just to where the Kijun Sen is located. Should be around 1.02. 1.0717, so we're looking at around 1.0725. Ideally, we don't see an hourly close below 1.0725. If we get that, and we actually might transition across the Ichimoku cloud, I'm not really looking at one straight move towards 1.08. If we do see that, then we'll get our entry on the swing trade, not on the hourly trade. But this one here, doesn't matter. I just need this one to transition across the Ichimoku cloud. So for the next 12 hours, right? As long as it stays flat, it will transition across the Ichimoku cloud. I just want to see a close below 1.0725. As long as we don't close below 1.0725, then I think we're good. And you guys thinking about jumping on the Euro USD right now? Let me just throw in a few cautions. One, it's actually within the Ichimoku cloud. Number two, the concern that I have is this stochastic is turning around, so maybe we are going to be stuck there for a little bit. As long as we got one more cycle on this one here, it doesn't have to be like all the way down to 20. As long as we get close to 50, then we can have the stochastics turn around, and it should have enough momentum to drive the market up. But what I'm looking at right now, it's probably potentially towards 1.08 at this point in time. Right, in terms of entry for this one, I'm probably not going to be looking for a short position. The key point here is that we're looking at 1.07 as a strong support. So in terms of stop loss, you might want to have it at just right at that end of the week there, which is pretty much 1.0670. We got support at 1.0660. That's the 161.8%. So we can leave it there at 1.06 in terms of stop loss. In terms of entry, you might get your entry here. You might get that above the Ichimoku cloud. So it ranges. It will range between 1.0725 to about 1.0750. Ideally, the lower it is, the closer it is to 1.0725. That's where we want to go long for the Euro USD. Your first resistance would come in at 1.08. The second one would come in at 1.0850. So technically, you will have two separate target levels. Right, just to give you an illustration on this one here. This one here, it's not for you to go in right now, but for you to plan ahead. So we got two target levels, 1.0850, 1.08. The second one obviously is not going to give you a good risk reward ratio. The first one is barely going to give you about 1-to-1 risk reward ratio. Regardless, we're looking at about 80, maybe between 80. Between 60 to about 80 pips, right? Because entry varies. We're just waiting for one more cycle on the stochastics to jump in on the Euro USD. On the hourly time frame, I would avoid jumping in today. I would wait just for this one to transition across the Ichimoku cloud, because this is right now within the Ichimoku cloud. There's a lot of concern going on there. But by any standard, if we're looking at the dollar index, completed a retracement towards 61.8%. The Euro USD, it's being held strong at 1.07. The Pound USD at 1.2. Then I think in terms of the pullback or the corrections that we see in the market, could be done from a technical standpoint, unless there's any surprises in the market fundamentally. Right, Aussie USD. Can you go long on Aussie USD? We'll cover gold towards the end of the session, so that would be the typical standard. All right, so Aussie USD, pretty much the same scenario with this one here. We are still within range, 69 cents to 71 cents. Halfway through there, maybe at around 70 cents. The stochastics hasn't turned on the daily time frame, so I'm a little bit conflicted myself. Right, if I take a look at the price and everything, it looks good, and you should already be jumping in. It's just that I don't really have a strong momentum for this one here. So this one here doesn't mean that you can't go long on the Aussie USD. It's just that you need to think that this is within the range. It's between 69 cents to 71 cents. And we're actually halfway through at around 70 cents. So if we take a look at the Aussie USD on the hourly time frame, we have transition above the Ichimoku cloud at the very least, right? I am keeping 69 cents. I might want to leave 68.50 as well, but this one, you got two options. disregard whatever the momentum is doing right now, because if price managed to close above 70 cents, it could just flip this one around again, right? So don't worry too much about this. Let's take a look at what price is doing. Unlike the Euro USD and the Pound USD, I'm not really too concerned on the momentum for the Aussie USD, because if we take a look at the daily time frame, it is kind of in the middle of the range, right? So we got this one transitioning above the Ichimoku cloud, so I think that's great, right? So a couple of scenarios for this one here. This one could stay above 70 cents for a little bit and grind higher. So, you know, there's that option there. You might actually want to go long if there is an hourly close. I'll just write it down just in case people mix it up. If there's an hourly close, all right, if there's an hourly close above 70 cents, then yeah, you might think about going long. But when we talk about an hourly close, we basically need a confirmed close above 70 cents. And in terms of stop loss, there are a couple of options. If this is the current low, I don't know if this is the current low, because we need price to go back above 70 cents. Then you can have your stop loss for as little as maybe 35 pips, 30 pips to 40 pips. Otherwise, you need to take on this one. That would be around 69.50 in terms of stop loss. It just makes a lot more sense. Or you can have 69 cents, completely up to you on this one. In terms of target level, you can go for 70.50, but ultimately you don't really want to go any more than 71 cents, right? So this one breaks above 70 cents. I think we still see a good amount left in there, about 93 cents. You know, you could be risking about 30 pips to about 60 pips for the Aussie USD, right? So this is option 1 on the Aussie USD. Option 2, if you're monitoring this on the stochastics, then you might actually see this one could pull back down a little bit. So we got one that closes about 70 cents. The other one, we might actually come closer to the Ichimoku cloud. So it could be here, it could be there, depending on the timing in the market, right? So there are a couple of options. But I'm looking for a long. I'm not looking for a short. I don't really want to go short the Aussie USD right now. So yeah, you might be able to get a little bit of an entry somewhere there a bit later on if you want to. If you're willing to wait, you know, where your stop loss is, you might be able to get an entry at 69.50. You might be able to get an entry at 69.25, right? I'll just put it around 69.50 if you want to look for a potential entry. Then you can go for that 70.50. It makes a lot more sense in terms of stop loss. You really want to put it below 69 cents, right? This one here gives you a lot more options. First target, you can go for 70 cents. That's going to give you about 1-to-1 risk reward ratio. You can go for 70.50. You can go for that 71 cent run as well if you want to. It'll make it super interesting. It'll be nearly 1-to-3 in terms of risk reward ratio. So the option is there. You got two potential entries on the Aussie USD. But jumping in right now, a little bit too hasty, a little bit too early. So yeah, I'm not rushing the Aussie USD, the Euro USD, the Pound USD, because ultimately we are going to be looking for that swing trade to happen on the daily time frame, right? So don't rush in. I don't think there's a need for you to rush in on this one. Yeah, it's not it's an okay risk reward ratio for the Aussie USD, but the Euro USD kind of lacking a little bit. Where should you put your take profit on Pound USD? A couple of options. Sorry. You can go for 1.2150. It's not going to give you a great risk reward ratio. You can go for 1.22 if you want to, but again, you got a couple of options. You can have it at 1.22. 1.2250. No, don't really want to go more than 1.23 at this point in time. So option is there. Completely up to you. You have 1.2150, 1.22, 1.2250, 1.23. You got 4 target levels to play around with the Pound USD. In terms of the risk reward ratio, the minimum risk reward ratio, you need to be targeting 1.2150. That's going to give you a 1-to-1 risk reward ratio. All right. All right. So let's leave it there for now. if we look from a fundamental perspective, then the EU and the Aussie USD should be great, right? We're talking probably more. Are you basing this on what the RBA and what the ECB is saying? Fundamentally speaking, I think USD looks great, right? Janet Yellen kind of says it. I don't think we can call anything a recession if the unemployment is at an all-time low in 54 years. So that's something. Okay, let's bring up this. I want to focus more on the yen crosses tonight, actually. So I'm not in any rush because I'm waiting for an hourly entry on those yen crosses. We can talk about the New Zealand USD first. New Zealand USD, in terms of the hourly time frame, it's not looking great. It's actually within the Ichimoku cloud. I'm not really too keen on the whole New Zealand thing right now. Sure. Swing positions, right? We already initiated an entry on the 65 cents mark. So we have seen a 200 pips pull back on the New Zealand USD. For this one to progress further, we basically need to kind of climb back towards the 65 cents. Whatever positions you have on the 65 cents, if you trade it based on the inverted hand and shoulder we take a look at a couple of weeks ago, then yeah, your stop loss is at 300 pips and we're not even there yet. I think we have pulled back down to about 150 pips right now. But this one is pretty much set in stone for the New Zealand USD. I'm not really looking at any new positions for now. You might scale in a little bit if the stochastics on the daily time frame crosses over. On the hourly time frame, again, very similar scenario. All of them are actually within the Ichimoku cloud. I need this one to just traverse out of it. In terms of time scale, it will be, taking a look at all of them. It's either 10 hours, 12 hours for this one to transition across. So I just need the New Zealand USD to remain flat at this point in time. If you're thinking of a potential breakout scenario on the New Zealand USD, you got a couple of options, right? You can use this at around 63.5 cents, right? Gnarly close above that, then yeah, I would still prefer if that entry happens in the next maybe 8 hours, right? We see that break happen in the next 8 hours. Yeah, great. I just want this out of the Ichimoku cloud. As long as this one is within the Ichimoku cloud, it's going to be a little bit tough. I just don't like how the hourly stochastics are showing up right now on the Euro USD, the Pound USD, and the Aussie USD. Pretty much all of the USD crosses are, we're looking at a little bit of an exhaustion in terms of momentum. So I would think that price would actually just remain range bound a little bit. We might not see a lot of action tonight, right? I want to see action tomorrow. I don't want to see the action right now. I want to see it tomorrow, Asian session. Then yeah, I might find an entry during the Asian session. We have a confirmed daily close. We'll know more about what to look for. But right now, if you're forcing yourself into a trade on the Aussie USD, Euro USD, Aussie USD is alright. It's transition. Euro USD, Pound USD, and New Zealand USD is all within the Ichimoku cloud. So I really want to see a transition out of it first. Alright, Chuck. I think you were in on that 65 cents trade. I'm pretty sure you're in on this inverted head and shoulder trade. If you're in on this one, then I will leave it. I might scale in again just to quickly rebalance stuff. But once we have that switch over on the stochastics. All right, dollar Canadian. Dollar Canadian has been really weird, right? Because we were actually really kind of flat on the dollar Canadian. Right, so dollar Canadian still capped by 1.35. I might be able to find a short entry on the dollar Canadian right now, actually. So yeah, we have transition below the Ichimoku cloud, so this is great, right? Again, look at the stochastics here. I think on the reverse, we take a look at the dollar Swiss. Stochastics at the bottom, the dollar Japanese yen, dollar Canadian. I'm just a little bit concerned that right now it's not a great time to go on whatever short-term trend that's existing right now. I do expect that recovery on the Euro USD, the Pound USD. I do expect the dollar CAD to continue to be sold, right? Just that I don't think it's now. I'll take this Fibs here because I can't really use that one there. So yeah, this one here, you need to watch out a little bit. If this one transition above that 23.6%, I don't think this is a great idea to attempt to go long dollar Canadian. I would wait on the dollar Canadian. I'm probably not gonna wait at around 61.8%. I would actually be waiting at around 1.34. So I just want to see price pull back towards 1.34. If it fails at 1.34, then that's where I'm probably going to be looking for a potential short. The problem with this one here is your stop losses is either going to be there, which is not going to be enough room, or it's going to be all the way up there, which is around 62 pips. Target level, you got 1.3350, but I think we are potentially looking at more towards 1.33. This is going to give you an okay risk to reward ratio. It's not as bad as, I initially thought. But for the dollar Canadian, I would prefer to be looking for a short position. So that's one. The other one is that I'm not looking at this as a flag. I don't think it's a flag or anything like that. But this is a pretty sharp support trend line. We're probably looking at around 50 degrees on this one here. But regardless, if it does break, then it will give you a much shorter opportunity. I don't like it if it breaks. Because, sorry, let me just adjust this there. Because if this one breaks the support trend line that we have here, then some of you guys might be thinking, yeah, I think it's a great opportunity to go short. But you got to take a closer look. If it does break there, then your target level is going to be limited to 1.3350, which is only like 20 pips. So I'm not really liking that options. But it's there. You got a couple of trades. One, you can wait for that pullback to happen closer to 1.34, right? I'll look for that rejection at 1.34, or if there's a break below that support trend line that we have, which is a very sharp support trend line at 50 degree. So it might be a short-lived movement to the downside. If this one happened, the first one happened, I don't expect price to go all the way there. It might actually just go there, and then it'll flatten out before going down. The other scenario would be for this one to just continue up closer to there and queue for a short. So you got two options on the dollar Canadian. All right, you see a bearish divergence on the Euro AUD on the hourly time frame. Let's take a look. Euro AUD on the hourly time frame, bearish divergence. I don't see a bearish divergence. Maybe you're looking at a regular class A bullish divergence. Right? Maybe you're looking at this. So, this was us. I'm not sure if this was us on the pound USD or something. It was us on the Telegram. Today someone actually asked me the same thing, but on a different pair. Does this constitute a regular class A bearish bullish divergence? This is a regular class A, right? This one here, it would be it's just that I don't see anything significant enough, right? Is it a regular class A bullish divergence? I think so, yes. Because if we take a look at this one, do you notice something else is in there? There's actually a falling wedge as well. So this is actually forming a falling wedge, which is a reversal pattern. So this one here needs to break a certain level before it can proceed higher. So that certain level will actually be at it'll actually be at a range between 1.54 and 1.5425. So if we can transition across 1.5425, then it's all good. That's the only concern that I have on this one here. So if we take a look at that and say, yeah, could it be a falling wedge as well, which is a reversal pattern? Yeah, I think so, but I wouldn't go for an entry and go for that 1.5425, right? So consider this. If you go long, right now your stop losses would be there. You still have resistance at 1.5425, which is not pretty, right? Risk reward ratio is not going to be great. So I would wait for a break above 1.5425 at least, then you can have your stop loss there. It's completely fine. So it's our target level, adjustable, because we have a lot of room to go for this one. You can go for that 78.6% initially, or you can go a little bit higher, maybe towards 1.55. Why 1.55? Because that was the resistance pretty much right around there, right? So I'm not going to go for that 127.2. You can if you want to, but I think 1.55 should be enough target for you guys. So yeah, this is a regular class A bullish divergence. I just need to see a breakout of a certain chart pattern, and you know, on the pound USD, I wasn't looking at a particular chart pattern, but on the Euro AUD, I think we can classify this as a falling wedge, which is a reversal pattern. We need a break of that patterns that we're looking at before we can get our entry. And if we look at this at the price levels, then it would really fall around 1.5425 if you're looking for an entry on the Euro AUD. Can price go to 1.5? I'm not seeing a bearish divergence, at least not on the early time frame. On the daily for Euro AUD, not seeing a divergence either on the Euro AUD. Can you go to 1.5? Look, we already, you know, we've bounced off 1.53. That's 127.2, and the market bounces off really sharply. So I don't think we're looking at anything significantly lower on the Euro AUD. Plus, if you take a look at 1.53, let me just highlight 1.53 for you. Right, it was previous resistance, turns support, and basically bounces off. We basically have a morning star on that turnaround as well. We can't classify the drop on the top as an evening star, so would be a little bit more cautious. So do we have a range? Yeah, we have an established range between 1.53 to about 1.57, so go for that target within those. EuroCAD on the hourly time frame, daily time frame, or what? EuroCAD on the daily, it's all right. It's above it's above the Ichimoku cloud, but again, anything on the daily, I think we just need to a little bit of a turnaround. I'm just not too confident opening an entry right now if we have the momentum still pointing down like that. All of them are suggesting that we are actually bottoming out. I think we're basing out a little bit, at least what we saw on anything non-US dollar base at the moment. Euro Canadian on the hourly time frame. This one here is a little bit interesting. I think we can actually create a little bit of a box for ourselves. 1.43. 1.4360, 1.4350. Okay, interesting. All right, you can box yourself on this one here. I might adjust this a little bit lower, 1.4350. I like round numbers, right? 1.4350. Could it be a descending triangle? I don't know. It's still within that. Hopefully it's not, but you got to consider that, right? Once you see it, I don't think you can actually unsee what we just saw. All right, on the Euro Canadian it's below the Ichimoku cloud. That's number one. Number two, I think there's potential for this one to turn into a descending triangle. We're still within that triangle at this point in time. So until we break that resistance trend line, if we break above the resistance trend line, does that mean we have a green light to go long? No, technically. We are still capped by whatever this box is giving us right now. So let me just cover that. Right. So it is a rectangle that has a descending triangle. Does that make sense? So this one here is a little bit flat because a descending triangle means a continuation pattern, but a rectangle means there's a little bit of a neutrality going on. If we take a look at the trend on the hourly time frame, it is below the Ichimoku cloud. So the theory that would play into this, and a lot of you guys probably look at this and say, hey, it's a descending triangle. I think we're looking for a continuation pattern. I would probably not consider that. I would consider the rectangle being a little bit more significant at this point in time, because the rectangle If we break above 1.44, right, that cap at the top is actually at 1.44, which is a psychological price level, and our base is at 1.4350, which is also a psychological price level. It's a 50 pip range, right? We break above 1.44, you know, that would cancel out the triangle that we see, right? So this triangle could still be canceled out. So I would focus more on this being a rectangle rather than this being a triangle. What I want to trade, how I want to trade Euro Canadian, would be more on a breakout scenario. If we break above that, then our stop loss would be at 1.4350 in terms of target level. You know, I don't think we can actually go high on this one. You can probably only go about 1.4450. Why 1.4450? We need to be a little bit more cautious on this one here because we have that. See that? We have that smaller rectangle going on there, right? So don't really want to exceed that as your potential target level. So it's going to be capped like that, right? Break above 1.44, we might traverse to 1.4450. You got your stop loss at 1.4350. This is all one-to-one risk reward ratio. In terms of how far down it could go, if it breaks below 1.4350, then we're basing this more on the range breakout strategy. So you still need to go with a one-to-one risk reward ratio. You got a couple of options, maybe a little bit higher in terms of your stop loss because we still have that high there. If it doesn't, then yeah, if we break lower, then your target would still be at around 1.43, which is going to be give you about one-to-one risk reward ratio either way. I think that's what I see on the Euro Canadian. I think I see a little bit more neutrality rather than anything else. All right. Would the US pair make another dip correction to the downside? With what happened right now, it seems like every US news that comes up become important. I think this is what happened, right? We got FOMC last week, and then we have a little bit of shocker in terms of the NFP numbers, the unemployment numbers. It was a little bit of a shock that happened on Friday. So what people are looking at this week, it's more on the US, right? What does the FOMC plan? What are they planning to do with the new information that they have, which is the really strong employment numbers? So chronologically speaking, on Wednesday we've got the FOMC sounding a little bit dovish, right? And then we've got the NFP on Friday, which is really strong for the economy. It doesn't show any sign of recession. Also, as people get employed, here's the problem. You know why people are concerned with how the FOMC could be hawkish on Friday. So let me just explain. Wednesday, the FOMC went a little bit dovish. They hiked by 25 basis points, and they say, look, inflation has come down. They admitted it. You know, maybe the current cycle would be more on a disinflationary kind of cycle. And then the NFP numbers happen, which is surprisingly good, but I don't really care about the NFP numbers. What I really care is actually the unemployment numbers. The unemployment numbers was at 3.4%. That's a drop. And it's also the lowest point in 54 years. If the FOMC is fighting inflation and people are actually getting employed, you know what people getting employed does? They get money and they'll actually spend more. And that's the concern, right? That's the concern that, you know, I think it's more of a sentiment rather than a concern. I think Wall Street, they're a little bit too enthusiastic on this one. So the assumption on Friday is that, hey, people get employed, people are working, so they are going to be spending more. If they spend more, inflation is going to go back up again. So that's where on Friday, people are actually afraid. Wall Street are betting that the FOMC could turn hawkish again. And then this week, we've got Bostic saying on Monday that, yeah, you know, inflation is not over, blah, blah, blah. People are looking for what Jerome Powell was trying to say. I think he came out last night and basically said the current information, the current data is not going to change their view, that they're looking at the market that is currently in more of a disinflationary condition. rather than anything else. So inflation might still go up, but they're not really hinting at, going back to a 50 basis points hike. They're not really hinting at going back to the 75 basis points hike. However, the target rate for the Fed funds rate, the target rate has gone up. It actually came, the consensus was that it was down to about 5.03 or 5.08. Now this is back up to 5.15% for the target rate. So yeah, is inflation gonna go higher? Probably not. But is the Fed going to continue hiking rate? Yes, the FOMC is going to continue hiking rates. I don't think there's any instance where the FOMC says that they're not going to be hiking rates. They're still going to be hiking rates. They're probably just not going to raise it significantly, like 50 basis points, 75 basis points, but they'll go to 25 basis points. And one thing to note, I think early in the year, and this is probably why last week's comments from the FOMC was significantly important, because people are looking for directions if there's actually going to be a rate cut in 2023. That's not going to happen. I don't think there's actually going to be any rate cut. I think we're still going to be in the process of looking at FOMC hiking interest rate to fight off inflation. So I think it's a little bit too early. People are jumping to conclusion that 2023 we might see a rate cut, blah, blah, blah. I don't think that's going to happen. Okay. Dollar oil. Daily time frame. You guys love your oil, don't you? Okay, nothing much has changed, I guess, for oil. Let me just go on the notes that we have on oil. Do we have this? No, we don't. All right. I think oil is in the current trajectory that we have right now, but oil on the daily time frame. What's the question again? A potential upside above Kumo this week or next week? A little bit tough, yeah. It's still range bound. We've still got our 77s. Again, it's going to be progressive, right? 75, 77, 80, 82. That's kind of the progression there. So I see that transition happening. See, this is the thing about oil. My target level, my entry level is still going to be way up there, close to about 83, 84. And that's unchanged. I might lower it, actually. I might actually lower it a little bit in terms of target entry level. I would probably go for 83, right? But that's mine. I want to see a close above 83 for jumping in on oil. Right, so let me just adjust this here. I want to see 83, right? I'll just leave it there. Yeah, somewhere there. All right, so focus on this one here. Is it going to transition above the Ishimoku cloud this week or next week? That's a really tough call, because if we take a look at the range and duration, right? It's $4, and in terms of time, how long is it going to be there? It could be 10 days. So it could be 2 weeks time. I can't really quite say that, yeah, this is going to break above the Ishimoku cloud and whatnot. But momentum-wise, we are above 77. We are above 77.50. This one has already crossed to the upside. So as long as you're trading, if you're planning to go long, right? If you're planning to go long and your stop loss is at around 72 cents, I think that's okay. But in terms of target level, don't go crazy on a target level, right? You can trade within the range, maybe around 80, right? So if we zoom in closer, if we have 80 as a target, do we have a small stop loss that maybe we can employ? You got a couple of stop losses, right? Obviously, you can have it below 77, but I don't think it's worth it. I think the minimum stop loss that you have would be at 75. So given the scenario, you got a minimum stop loss at 75 and your target is at 80. That gives you a pretty bad risk reward ratio, and I don't think it's worth it. That's what I'm looking at. If we go on to the hourly time frame, then this one here is on track. We are pretty much likely going to go towards that 127.2. And if you're thinking, right, okay, sounds great. Should I jump in right now? I probably wouldn't do that. If you can find an entry closer to 77, I think that's reasonable. Then we can use this as a potential low there, right? So as long as it's as long as it maintains a position above 77 cents, then I think you're gold on this one here. I just want to see a close below 77. If we have a close below 77, then no go on any long position on oil. All right, so I'm not in any rush for oil. Banbari Lao, man, I really appreciate it if you just don't caps and yell like that. But yeah, I'll take a look. You just have to type it in. All right, GP Cat, explain structure. What structure is that to explain? It's in an uptrend. Yeah, it's going a little bit flat right now at this point in time for GBP Canadian. We still have support at 1.61. I don't think we need to go by the fib anymore, but yeah, we got strong support 1.61. Not really too concerned. This one here, pound cat, we haven't talked about the yen crosses, right? I'll talk about the yen crosses immediately after this. So pound Canadian, pound USD, what we're looking for, we're looking at a little bit more of a transition on the daily time frame. We're just waiting for that transition to happen. So with the pound Canadian, maybe you got two levels to watch out for. It's actually not just 1.61, because considering the volatility, you need to consider 1.6 as well. All right, so this is going to be your support level for the pound Canadian. What I want to see is that I want to see a bounce off 161, 160. I just don't like where it is located right now. It's actually within the Ichimoku cloud, which is why I want to touch base on the sterling yens. This one here, in terms of fib, has basically reached 78.6. So what we're looking at here, we're looking at more of a transitioning on this one here into a symmetrical triangle. So keep an eye out on this one for the sterling yen. This is actually really flat. I'm not really looking at anything lower at this point in time. I think in terms of, you know, sustained stop loss, sustained support, we actually have a more sustainable support on this one here. So it is more of a symmetrical triangle rather than anything else. The hourly is, I believe, if I'm not wrong, it's actually what makes it interesting, right? So we got one key level is actually at 157.50. Now, as long as price doesn't travel below 157.50, we could actually be looking at a slightly stronger sterling yen here. In terms of target level, you can play around with this one here, obviously. But I would really want to take your attention to 157.50 first. If you're thinking of going long on sterling yen, you could, just as long as your stop loss is actually below that, 157.50. In terms of target level, you can play around with it. But I'll probably be looking at a little bit more for return closer to 159, 159.50. So initial risk to this one is going to be about 100 pips. But once we transition above the Ichimoku cloud, once we transition above 158.75, right? Once price goes there and it goes above 158.75, what makes this interesting is that I can adjust my stop loss immediately towards 158. It'll turn the risk to reward ratio right now, which is about 1.1 to 1/4, which is really great. So I think this is something you can play around with. And if you're thinking, all right, I want to just jump in right now, and you want to have your stop loss maybe at 158, I think it's still reasonable, right? But I really want to have it below 157.50 just to be safe. Okay, once it transitions above 158.75, then yes, we are going to be tracking higher, 159, 159.50. No big issues on the sterling yen. The euro yen, I would hold off a little bit, but we also have a key level, which is 140. So I'm just going to stand by a little bit on the euro yen. The euro yen here, you can actually box it up a little bit. In terms of level to break, we got 140.90 to maybe around 140.75. Right, so if we box it up as a resistance, we got 140.75, and about, you know, closer to 141. So I'll just adjust this to 141. Right, we break through that 25 pips range, then yeah, we are going to transition higher. Does that mean that we are actually looking at, you know, a sudden reversal to happen? Not yet. because if we still go by this fib here, the 50% is actually going to be about 141.50. So yeah, so you got a couple of options here. I like going long on the euro yen as long as it stays above 140. And that's pretty much it. As long as it stays above 140, I don't mind going along, right? But I really want to see a break above at least 140.75 before going in long on the euro yen. Once we break above 140.75, then yeah, we can track higher on this one. You got 141.50. Then you can go for that 61.8%. You can go for that 78.6%, and it'll make it a lot more interesting. But just keep an eye out on 140 at this point in time, because that's the level to watch out for. All right. US 30, sure thing, on the hourly time frame and daily time frame. Hourly, I'm guessing. Let me zoom out a little bit on the US 30. So yep, we don't have that drop from the FOMC. We can get rid of that. We can get rid of that. Done, 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 done. Done. Okay, so in terms of resistance, we're still flat. We still got that 34,100 level, pretty much capping the market. So with the US 30, this is going to be interesting because this is like super choppy on the US 30 right now. So I might actually have to go on. I don't think 4-hour time frame is going to help either. So we got a little bit of a whipsaw going on with the US 30. So this one here makes it a little bit tough to look at. Okay, so I don't like checking my fibs like this. It's just too short, right? I much prefer, since it's around that low, I would probably just look at it like that. Now, if we do it this way, I think we need to focus a little bit more on 33,900, which is going to fall between 50% and 61.8%, which is also where the Ichimoku cloud is located. So right now, if you want to go short on the US 30, yeah, you can. Your stop loss needs to be above 34,250. Your target level is going to be limited towards 33,900. It's not going to give you a great risk reward ratio, but yeah, I mean that. I think that's where it's going. If you had this at a higher level, maybe at 34,100, you know, that's going to give you a much better risk reward ratio. If you're thinking, yeah, you know what, I just want to go in short intraday wise, the 15 minutes time frame is actually within the Ichimoku cloud, so this is actually not great to go in for a short trade. So I think overall we're still above the Ichimoku cloud in terms of how far down. We're still within that correction right now. I don't think we are looking at 61.8%. I think we're probably looking at 50% before it bounces up. Is it going to create an extensively new high at this point in time? Probably not until the stochastics turn around. And this is looking at the hourly time frame. For this one to turn around, it does take time. So yeah, I think this one here, we might see a little bit of a correction still until we can transition above 34,010, then yeah, that's where we might queue up a little bit. What's my long-term view on the yen crosses? My long-term view on the yen crosses, it's this. It's still choppy. It's too early to tell. At least on the sterling yen and the euro yen, it's all within range. The dollar yen, no matter how you look at it, all right, we were aiming for that correction higher towards 132. The cap was at 133.50. So I think we have gone past that cap. This one, I can get rid of it. Right? In terms of support level, I think 130 stands. If we have a daily below 130, then yeah, we would transition lower on the dollar yen. So for the dollar yen, what's likely going to happen is that my long-term view on the yen is that I expect a stronger yen. No matter how you're going to look at it, the Bank of Japan is going to change. That's the big cue. That's kind of the big thing for 2023. We know there's going to be a change in how the Bank of Japan is going to be run. All right, how things are going to get done. They started playing around with the yield cap. They started extending the yield cap. I think that's already a good sign that they are likely going to turn a little bit more hawkish, at least less dovish. Their ultra loose monetary policy is going to shift. So my view for the long term, at least in 2023, is that I do expect a stronger Japanese yen. That's probably going to happen once we have a new Bank of Japan governor, which is going to be in April. US oil belongs to US oil is commodities, not forex, but you guys are trading CFDs, which is contract for differences. So contract for differences includes forex, includes commodities, which is gold as well, right? US oil, you can trade CFD equities. That's your US 30, Nasdaq, S&P. And then you got your coins, and then you can also trade CFD stocks as well. Is there any correction between dollar index and the Nasdaq 100? You mean connection between the dollar index and the Nasdaq 100? Normally they are inversely correlated, but I wouldn't take that as a strong sign of a strong correlation or anything like that. Because Octa now covers stock, could we talk about stocks? Maybe like what do you think is the gain on Nasdaq in recent days? I guess so. We can talk about stocks. Do you have any stocks in particular that you want to talk about? Do be careful with Nasdaq here. We're seeing a little bit of an exhaustion happening, at least on the daily time frame. This one here is really trying to get past 127.2. Doesn't mean that it can't go to 161.8%, but if it continues to fail at 12,800 and the momentum dip down, we would consider this cycle to be done, right? We would consider this to be done, and we do expect a little bit of a pullback lower on Nasdaq. So if we flip it, we basically have a new fib. And if we take a look at that new fib, the 38.2% is going to be around 12,000. That's going to be a little bit more of a significant level than you think, right? So this one here, we are transitioning a little bit. We haven't gone past 12,800. If we've gone past 12,800, then yeah, we might see a stronger Nasdaq. But at this point in time, in terms of Nasdaq and the US 30, I do expect a little bit more of a pullback towards 12,000 before we can actually see anything that's significant on Nasdaq. Meta and Apple? Sure. Just for a disclaimer purposes, I do have Apple and Meta, but that's really more of my life savings rather than anything else. All right. Apple and Meta. Not really too concerned about the gap that needs to be filled. I think we still have a little bit more room for Apple to go, right? Earnings was out earlier this month, but that doesn't really help much, right? We still capped by 127.2. I think there's a little bit more of a disappointing tablet sales. That's pretty much the usual, but I think the iPhone sales was kind of dragging a little bit as well. Their services are kind of lacking as well, so I think that's pretty much stayed in the earnings. Right now, if we take a look at this one here, we have a cap at 157. That's pretty much a significant cap on this one. Can this one push higher? I think Apple still has room to push higher. In terms of the momentum, I think we're still looking at a stronger momentum for Apple to push higher. Right? Can we go higher? Yeah, I think we could look anything past 160 at this point in time. I think I'm really looking forward to this one returning closer to 165 rather than anything else. So that's the number I have, and that's basically the target that I have for Apple. Closer to 161.8%. So I don't think this is quite done yet. Oh, what's my view on cryptocurrencies? Actually, I do want to talk about Bitcoin a little bit, and then we can wrap it up for today. I promise you. So Bitcoin this is on the 4-hourly time frame. This on a cryptocurrency base. This is kind of formidable at this point in time. This is going to be the main focus for a lot of crypto traders. This is actually within a rectangle, and this has been a prolonged period of time for the Bitcoin here. So we take a look at the daily time frame. It's actually really flat, right? And take a look at the momentum going on the daily. It's actually really flat right now. So we are looking at a little bit of a reset going on here. Does that mean we're going to be looking at a potentially stronger Bitcoin in the near future? That would still depend on whether or not it'll actually break above 24,000. We still need a close above 24,000 for any rally to happen, but that's pretty much the cap that's been going on there. So we zoom in a little bit on the hourly time frame. Take a look at this one here. This one, at least on the hourly time frame, we're looking at a little bit more of a stronger momentum building up. We don't actually see a little bit of an extension. I think we're looking at more on a little bit of a retracement going on. So funnily enough, it's actually going to be at 23,000. So we actually have a range that becomes smaller at this point in time. So if you're trading this intraday and price bounces off 23,000, then I think it's a good sign that we might actually see a potential rally back towards 24,000. All right, you guys start asking stocks right now. We are at the end of the sessions. How about this? I'm not sure because I think OctaFX has a special webinar on CFD trading, right? I think Karyong is doing it. If I'm not wrong, I'm not sure. Is it on Tuesday or Thursday? Maybe Team Octa can help out. But there is a session on stock CFDs already. All right. We'll do gold, and then we'll wrap it up for tonight. If Team Octa, if you guys can help me out, there is a stock CFD session. I just don't know if it's actually going to be Tuesday or Thursday. Right. So gold, just to give you a heads up, we haven't actually break any lower than the flag that I was concerned about. I don't think we can consider it a flag anymore at this point in time. Has it gone past 20 periods? It's still okay. 15. Right. So this is going to be tough. You're actually between a rock and a hard place for gold. Right now, if we take a look at the 4-hourly time frame, the hourly time frame, even on the daily time frame, there's a potential for this one to turn into a flag, a bearish flag, that is. So therefore, we could potentially look at further continuation to the downside for gold. Now, if you take a look at the 4-hourly time frame, the hourly time frame, we actually find resistance at 1880 to 1900. So as long as we are within that range, there's a little bit of a concern here that once we break this flag, which is still a flag on the 4-hourly time frame, it's no longer a flag on the hourly time frame, right? It's been 67 bars. But we identify that on the 4-hourly time frame, so we'll use that on the 4-hourly time frame. So 4-hourly time frame, the focus is this: if there's a break below that support trend line that we have, it will confirm a bearish flag, and if that happens and the momentum turns around, then we might actually see a drop lower for gold. All right. Thing with gold here, with the US dollar correction, this is likely going to be different. Gold rallies up because it was more on the FOMC being dovish rather than anything else, right? And then it drops off because people are panicking that, FOMC is going to continue hiking rates, and that's pretty much true. So with gold, as long as the FOMC continues to hike rate, it kind of creates a limit in terms of how far up a gold can go, right? Because as long as they hike interest rate, the cost of holding gold is still going to be more. Technically speaking, if we take a look at this one here, we still need to keep an eye out on 1880, 1900. I much prefer to go for a short, but I don't think it's appropriate right now to go in for a short because I need further confirmation. If we break below that, closer to about maybe 1870, 1860, then yeah, we can identify that as a bearish flag. Then we are looking for a continuation pattern. Ultimately, you still have 1850 to deal with, 1840, 1825. So yeah, but I'm not really too keen on anything gold at this point in time. Intraday wise, you might want to snap this whatever within the range, but keep you're cool, because as long as price is close to 1880, 1900, that's still going to limit any progress to the upside. Okay, so that's my view on gold. All right, it's on Thursday. So stock CFD trading is on Thursday. Timing wise, is it the same time or is it an hour after this? I think it's about the same time. All right. All right, guys. I think we can wrap it up for this week. I don't think we have anything significant this week in terms of calendar. Today's Wednesday. We got German inflation rate tomorrow, and that's pretty much it. RBA statement on Friday in terms of their monetary policy. Doesn't really matter much. UK GDP on Friday, and that's pretty much it. You got Canadian employment numbers, but we already have the American employment numbers. Yeah, that's pretty much it. All right, guys. Have a great day ahead. Thanks for joining in, and I'll see you next week. All right, guys. Have a good one. Stay safe.